for more on this and what's moving markets Tuesday. Well, let's bring in Michelle Schneider, partner and director of trading research and education at MarketGauge.com, and Octavio Morenzi, CEO of Optimus LLC. Thank you both for being here. Octavio, I want to start with oil prices. Obviously, this type of weather event isn't going to cause lasting changes in the commodity, but we have watched prices steadily increase due to those cuts we previously talked about and a perceived increase in demand as we see the vaccine rollout taking place. What's your analysis of the sector at this point, Octavio?
Well, I think the price of oil through this severe weather you're seeing in the U.S. at the moment has actually been remarkably stable. So we haven't seen much of an impact from that. But I think the game is really OPEC having cut its production quite severely, and a whole bunch of non-OPEC countries also having cut their production because the oil prices came down so low. So a lot of oil facilities were simply not profitable, and particularly in the U.S. and in Canada and places like that, and cut their production in response to that. So it's been a story of production cuts, but we've seen now over the course of the past 6 or 7 months production at OPEC inching back up, and in terms of price we're back to sort of pre-COVID levels. So it's looking kind of encouraging return to normality, but we're still under the covers really seeing a collapse in demand for oil. Most of the oil used in the US and other developed markets is for travel rather than any sort of other application. So that is where the bulk of things happen. And it's interesting to see right now in Europe, for example, the shutdowns seem to be getting more severe and worse even than they were just a few weeks ago. So it's not clear that we're really returning to a normality anywhere in the world at this stage, but the balance of the risks look like we might have further shutdowns and further crimps on travel. So OPEC's going to have to keep a very close eye on that and maintain the price stability. But I think the price stability we've seen has been as a result of them sort of fine-tuning their production and little more than that.
And I was going to say, we're going to keep an eye on that as always, because OPEC Plus discussions kind of, they get a little bit heated, but they always seem to kind of agree on the guts at the end of the day and keep this movement going. Michelle, I want to move over to equities. Now, after hitting record highs early in the session Tuesday on renewed stimulus hopes, the three major indices here in the U.S., the Dow, S&P, and NASDAQ, they fell into negative territory. The Dow, however, was able to claw back some gains by the end of the day. What are you seeing moving markets Tuesday?
Well, the big thing that's going on in the markets right now is, first of all, in terms of it going a little bit down in those three indices, the market has been going straight up, and anytime it needs to some kind of correction, there's been buying in there. So instead of looking exactly at the indices, I think you have to look at exactly what you're saying is what is going up. And I think the biggest winner today in terms of the macro and the health of the market and potentially for the economy is the transportation sector, which actually went to new all-time highs today and closed in the green. That and the junk bonds, which also close a little bit red, but is near highs, I should say annual highs, 52-week highs. And so I think there's still a lot of optimism based on the stimulus package. But just stepping back in terms of the overall market, we're really going inside the range of last week, except in semiconductors that went to new highs, regional banks that went to new highs. So it's a mixed bag, but still the overall health looks pretty good at this point.
I mean, and as you said, if you look at where we've gone from the beginning of the pandemic when things really fell, we've basically been going straight up for about the last 9 months. Octavio, we're also seeing 10-year Treasury bond yields top 1.25% for the first time since March of last year at the onset of the pandemic. 30-year Treasury bond yields are also rose to 2.08%. What does this rise in bond yields tell us about the state of the economic recovery?
Well, I think what we're seeing is an increasing concern about inflation. And so it seems that those bonds, the buyers of them, investors of them, are starting to ask for more of a premium for holding on and taking on that increasing inflation risk. So the Fed has just pumped a huge amount of liquidity into the markets, and that has a risk of coming back and boomeranging in the form of inflation. And I think you're starting to see people increasing concern about that. So there's going to be pressure on longer-term rates. I mean, the Fed has been very effective about keeping short-term rates very low, and that's where most of the buying activity the Fed has been short-dated bonds at that end of the yield curve. And it looks like the longer-term rates might be getting a bit away from them, so we'll have to remain and see. But I think what we're seeing there is people concerned about inflation and saying, if I'm going to take on these long-term rates, I better be compensated for it.
And now we get to the fun. Bitcoin broke another record on Tuesday, finally eclipsing the $50,000 mark, going as high as $50,602 around 7:30 a.m. Eastern Time. Now, the world's most popular cryptocurrency has basically been on a tear in 2021, gaining roughly 70% since the start of the year on the back of the rally that began to close out 2020. Institutional money has really pushed the price up recently, and news that Elon Musk's Tesla had bought $1.5 billion in Bitcoin has further supported that rally. Meanwhile, we're also seeing altcoins like Ripple and Ethereum. They're making substantial gains as well. Now, Michelle, what do you make of this latest run? As someone who is probably as more of a traditional equities investor, how important is this injection of institutional money into Bitcoin?
Well, before I answer that, I just want to jump on Octavia's point about inflation, because Bitcoin, part of the move has been as a sort of new hedge against inflation. So I just want to mention that that is a real concern. In terms of going back to the institutional investments in Bitcoin, I think it's incredibly significant. I mean, not only, right, is Tesla doing cash for Bitcoin, but you had BNY Mellon last week mention that they were also going to be looking at a digital asset unit. You have Jack Dorsey talking about Square Crypto, which basically is going to give grants to Bitcoin developers. And if this trend continues, even MicroStrategy came out today and said they were going to borrow $600 million to buy more Bitcoin. So as this continues to be a trend, I think that bodes well overall for Bitcoin. And we can see, as you mentioned, it is now trickling into some of the other alternative currencies, Ethereum being second, Litecoin being third, and even Dogecoin really reflects the hysteria that we're seeing here as far as the volatility of crypto going forward. So I think it's going to be a while before we start to see that change. Obviously, you have to look at crypto and Bitcoin like you would look at any type of equity and look at it from a technical standpoint. Now that we broke through 50, came back down, I'm looking for 47 to hold. Otherwise, we could see some shock selling. Otherwise, we get back through 50, we'll head up to 60.
And Octavia, that's what I wanted to hit on before we go. We just mentioned it popped 70% just this year alone. We've talked about it on this show that Bitcoin could be headed to $100,000. A while ago that might have seemed crazy, but today not so much. Do you see it continuing to go up, or are we due for a Bitcoin correction at this point?
Listen, I mean, it's almost a fool's errand to try and predict where Bitcoin is going to go. 100,000, why not? 100,000 is my favorite number. But I will say I think it's interesting that Elon Musk has converted Tesla into a crypto hedge fund that happens to have a sort of fairly unprofitable line of car manufacturing on the side. And that's where he's going to make all his money in the coming year, it looks like, with Bitcoin investing. So maybe he'll spin off the car side of things and just focus on crypto investing. And focus on that, since he seems to be very good at that.
Octavio Morenzi of Optimus LLC and Michelle Schneider of MarketGauge.com. Thank you both for your time today.
Thank you.
Thank you.